Section 509A4 Organization. Section 509A4 excludes the classification private the foundation of the organization that qualify under Section 501C3 organizations that operate with the purpose of the testing procedure for the product for the public safety. Generally, these organizations test consumer products to determine that their acceptability of use for the general public. Loss of classification with a public charity. If the public charity no longer qualifies as a public charity under Section 509A1 through 4, if they become with the private foundation, they must be filed with the form, the 990 PF, the return for the private foundation, or Section 4947A1 trusted treated as a private foundation. Private operation foundations, operating foundation. Some private foundation qualify as a private operation foundation. They type of the private foundations that, although lacking general public support, may qualify distribution directly after the conduct of the educational, charitable, religious purpose as distinct from the merely making the grants to the other organization their purpose. Most of the restriction requirements that apply for the private foundation will also apply to the private operating foundation. However, they are advantaged for being classified as private operating foundation. For example, the private operation foundation is compared to a private foundation can be recipient of grants from the private foundation without having distributed the funds received currently within 1 year. Funds nevertheless may be treated as a qualifying distribution by donating private foundation charitable contribution to the private operating foundation qualifying for the higher charitable deduction limits for the donor tax. The return of the excise tax on the net investment income does not apply to the extent of the operation foundation as a private operation foundation that meets certain additional requirements to see exempt operation foundation later. Or the private operation foundation is any of the private foundation meeting the assets test with the support test and endowment test and makes the qualifying distribution directly for the activity conduct for the activities all which the organization substantially at all 85% or more or less adjustment in net income to minimum investment return. Asset test in private foundation will meet the asset test with substantially more than 65% of the more of the assets devoted directly to actively conduct the activity functionally related to business or a combination of the two. Stock or corporation that control by the foundation or by the ownership of at least 80% of the total voting power of all the classes stock entitled to the vote, at least 80% of the total share of all the other cases of the class for the stock is substantially at least 85% of the assets which are devoted as directed above. Any combination of the one or two of the tests is intended but they apply to the organizations such as museums and libraries. Support test. A private foundation will meet the support test. Substantially at least 85% of the support other than gross investment income that normally received from the general public, 5 or more unrelated exempt organizations. No more than 25% of the support of the gross investment income that is normally received from any one exemption organization. No more than 50% of the support normally received from gross investment of the income. Test intended to apply special purpose to the foundation, such as the Learned Society as association with libraries. Endowment test. A foundation will meet the endowment test and normally may qualify distribution directly activity to conduct with exempt function at least 2/3 of the minimum investment and return of the minimum investment return of any of the private foundation less of any tax year of the 5% of the excess of the total fair of the market value. All assets of the foundation other than those used directly in active with the conduct with exempt purpose over the amount indebtedness required to acquire those assets, and determining whether the amount of the qualification distribution at least 2/3 of the organization minimum investment return. The organization isn't required to trace the source of the expenditure to determine whether they were derived from the income for the contribution. The test intended to apply to the organization such as the resource organization actively conducted with charitable activities whose personal services are greater than the relationship of the charitable assets, but the cost of those services cannot be met on the small endowments. Exempt operation funding. The exempt exercise for the net investment income doesn't apply with the exempt operation foundation. Exempt the operation foundation the tax year is any private foundation that its operating foundation as described previously has been publicly supported for at least 10 tax years that wasn't operating with a foundation on January 1st, 1983, or has the last tax year but any of the before January 1st, 1983. Of the governing body at all times during the tax year is broadly represented with the general public records consisting of individuals no more than 25% of whom disqualified individuals. 4. Doesn't have any officers at any time during the tax year who is disqualified an individual. The foundation must obtain the determination letter from an IRS recognizing the special status of this existing organization later. New organization. If they apply for the recognition of the exemption of the organization described in Section 501c3, if you wish to establish the organization private operating with the foundation, you should complete with the Part 10 of your exemption application form 1023. Existing organization. If you are an existing organization seeking reclassification as a private operation funding or an exempt operation funding or an exempt operation foundation, you must file with the form 8940 to request the miscellaneous determination. Proposed relationship regulations on good faith determination. Proposed regulation modifies the standard of making the good faith determination for an organization, charitable organization, grants of which may be qualifying distribution, non-taxable expenditure. The proposed regulation identify the broader class of taxes practitioners upon which the written advice of the private foundation may be based on the good faith determination. Proposed regulation on good faith determination. Alright, lobbying expenditures in general, a substantial part of the activity of the organization consists of the carry on propaganda, otherwise attempting influencing legislation. Organizations exempt from the federal income tax will be denied. However, the public charity on the other than a church and an integral auxiliary of the church or a convention, association, church, or a member of the affiliated group of the organization that includes the church, etc., may avoid the result such as the charity can elect to replace a substantial part of the activity test with the limited defined term of the expenditure for the influencing legislation. Private foundations can make this election. Making the election use of the Form 5768, the election revocation election may be eligible for Section 501c3 organization to make expenditures to influence the legislation to make election for the form must be signed with the position postmark with the first tax year with which they apply. The forms of use to revoke election, but they must be assigned with the postmark before the first day of the tax year which applies. Eligible Section 501c, the organization that may be made the election to be subject to the limiting of lobbying expenditures must use Part 2A, Schedule C, Form 990, 990EZ to figure these at times. Or attempting to influence legislation. Attempting to influence legislation for the purpose of the means. Any attempt to influence any legislation throughout the effort of the effective opinion of the general public in any segment throughout the grassroots of lobbying, and an attempt to influence any legislation, therefore the communication with any of the members employed legislative body with any government official employee who may participate in the formulation of the legislation direct lobbying. However, the term attempting to influence legislation does not include the following activities: making available the result of the nonpartisan analyst study of the research, examining and discussion broad social, economic, similar problems, providing technical advice to citizens wherever the advice would otherwise constitute influencing legislation to a government body or committee other than subdivision through therefore responsible for the writing of the request of the body of the subdivision. For appearing before the communication with any legislative body with the possible decision of the body that might affect the existence of the organization, the power of the duties and tax exemptive status, and the deduction of the contribution of the organization. Communication with the government official, communication with the government official or employee other than communication with a member of the employee or the legislative body when the communication would otherwise be constitute an influencing of legislation. A communication with the principal purpose of influencing legislation. Also excluded all communication between an organization bona fide members by the legislation, proposed legislation, direct interest of the organization and members, unless the communication directly encourages the members to attempt to influence the legislation, directly encourages the members to urge non-members to attempt to influence the legislation as explained earlier. Lobbying expenditure limits. If the public charitable organization makes the election to be subject to lobbying expenditure limit, the rules intended instead of the substantial parts of the activity of the test, it won't lose the tax exemption status under Section 501c3 unless it normally makes lobbying expenditures that are more than 150% of the lobbying non-taxable amount of the organization each of the tax year. Grassroots expenditures that are more than 150% of the gross roads non-taxable amount of the organization each of the tax year. See taxes on excessive expenditure for the influence of legislation later on in this section. Lobbying expenditure. There are any of the expenditures that made for the purpose of attempting to influence legislation discussed earlier on attempting to influence legislation. Grassroots expenditure. The term that refers to only the lobbying expenditure that are made for the influence of legislation by attempting to affect the opinion of the general public in a segment thereof. Alright, lobbying non-taxable amount. The lobbying non-taxable amount in the organization for any of the tax years less than $1 million, and 20% of the exempt purpose of the expenditure for the exempt, the purpose of the expenditures are over the $500,000, $100,000 plus 15% excessive exempt purpose of the expenditure over the $500,000 exempt purpose of the expenditures are over the $500,000 but not over the $1 million. $175,000 plus 10% of the excess exempt purpose of the expenditure over the $1,000 exempt purpose of the expenditures over the $1 million but not over the $101.5 million. $225,000 plus 5% excess for the exempt purpose of the expenditures over the $101.5 million exempt purpose of the expenditures over and $1.5 million. Or the term exempt purpose of the expenditures means the total amounts paid within curves, including the depreciation, amortization, the total national expenditure, and exorbitance for the tax year for the accomplished exempt purpose of the additional, including administrative expenses paid within curve for the organization exempt purpose, and amounts paid in curve for the purpose of the influencing legislation, whether or not the legislation promotes the organization exempt purpose. Exempt purpose of the expenditure do not include the amounts paid within curve for the two or for a separate fundraising unit with the organization and one or more of the organization if the amount paid for the incurred primarily fundraising. Grassroots non-taxable amount. The grassroots non-taxable amount of any organization for the end of the tax year with 25% of the lobbying non-taxing amount of the organization for that tax year. Years for which the election is in effect. One of the organizational elected will come under these provisions. The election will be in effect for all the tax year of the end of the after the date of the election and begin with the organization revoke this election. Note: those elected provisions of the lobbying activities of public charity do not apply. The Church of the Integrity Auxiliary of the Church of the Convention of Association Church of the member of the affiliated group of the organization that includes the church, etc., by the foundation. Moreover, these provisions won't apply with any organization for which the election is in effect. Expenditure of affiliated organization. Two or more Section 501(c) organizations are members of the affiliated group of the organization. A list one of these organizations have made an election regarding the treatment of the certifying lobbying expenditure. The determination of whether the excessive lobbying expenditure has been made. The determination as to whether the expenditure limit described earlier has been exceeded by more than 150% made, but as though the affiliated group of the one organization. If the group has an excessive lobbying expenditure, each of the organization for which the election affected the year will be treated as an organization. The excessive lobbying expenditure in the amount of the equal to the organization proportionally shared with the group the excessive lobbying expenditure within expenditure limits described in Section 8 or in exceeding more than 150%. Each organization for which the election is elected for the year will lose the tax exempt status under Section 501(c)(3). Two organizations will be considered the membership of the affiliated group of the organization. The governing instrument with one or more of the organization required to be bound with the decision other than the organization on legislation issues. The governing body of one of the organization include the person who are specifically designated representative of the other organization or a member of the governing body, officers, paid executive staff members or other organizations, and have enough voting power to cover the preventing action of the legislative issue of control of the organization by combining their votes. Or tax on excess of expenditure that influence legislation. If an election of the tax year is an effect of the organization, the organization exceeds the lobbying expenditure limitation by the exercise 25% of the excessive lobbying expenditure for the tax year, but will be imposed excessive lobbying expenditure for the tax year. In this case, means the greater the amount which the lobbying expense was made by the organization during the tax year, or more than lobbying non-taxable amount of the organization for the tax year. The amount of which the grassroots expenditure made by the organization during the tax year, was more than the grassroots non-taxable amount of the organization tax of the year for that tax year. Eligible organizations that have been made of election to be subject to the limits of lobbying expenditure that over the tax and expense excess lobbying expenditure that is computed in Part 2A of the Schedule C of the Form 98 must form the 47020 for the report pay the taxes. Organization that no longer qualifies. Organization no longer qualifies for exempt under the Section 501(c)(3) because of the substantial lobbying activities won't at any time thereafter be treated as an organization described in Section 501(c)(4). Provisions, however, that does not apply to certain organizations, churches, etc. that can make the election discussed earlier. Tax on disqualified lobbying expenditure. The law imposes the tax on certain organizations if they are no longer qualifying under Section 501(c)(3) by reason that have made disqualifying lobbying expenditures. That additional taxes may be imposed on the manager of those organizations. Tax on organization that lose the exemption under Section 501(c)(3) due to lobbying activities generally will be subject to the exercise of tax of 5% lobbying expenditure. The tax does not apply with the private foundation. All of the tax does not apply with the organization that have elected the lobbying limits of Section 501(8) for the church. For the church, the relationship of organization that can elect these limits, these taxes must be paid by the organization. Tax on managers. Managers may also have the liable 5% tax on lobbying expenditure. The result of disqualifying the organization for the tax applied with the manager would have to agree with the expenditure, knowing that the expenditure will likely to result in the organization not being described in Section 501(c)(3). Note that the tax will be imposed with the manager's agreements and is willful as in due with reasonable cause. Excise tax on political expenditure. The law of exposing the excise tax on the political expenditures in Section 501(c)(3) organization to taxes imposed on both organizations and manager of those organizations. Tax tax on organization. Initial tax of 10% of certain political expenditures is imposed on a charitable organization. Second tax of 100% of the expenditure is imposed on political expenditure that result in the imposition of the initial first tier taxing is corrected within a specified period. These taxes must be paid by the organization. Or taxes on management. Initial tax of 2% of the amount of the certain political expenditure for up to $5,000 each for the expenditure is imposed on the manager of the organization who agrees such expenditure, knowing that they will be they are political expenditures. No tax will be imposed if the manager agreement wasn't willful and was due to the reasonable cost. The second tax of 50% of the expenditure up to $10,000 each for the expenditure is imposed on the manager if he or she refuses to agree to the correction of the expenditure that's related to the imposition of the initial first tier tax. For the purpose of this tax, an organization manager is generally an officer, director, trustee, or any employee having the authority, responsibility, reasonability concerning the organization political expenditure. These taxes must be paid by the manager of the organization. Political expenditures. Generally, political expenditures will trigger these taxes amount paid with them incurred with the Section 501c3 organization participation in intervention in any political campaign or against any candidate of the political office. Political expenditures, including public distribution statements for the purpose of public expenditure, also include certain expenditure for the organization formally primarily to promote the prospective candidacy of the individual public office or organization that are effectively controlled by the candidate are usually primarily to promote the candidate. Alright, current correction of the expenditure. Correction of the political expenditures is recovered if possible, all or part of the expenditure of the establishment of the safeguards to prevent future political expenditures. Status after loss of the exemption for the lobbying political activities explained earlier, and the organization can lose the tax exempt status under Section 501c3 before lobbying activities, participation, intervention in political campaign on behalf of the opposition of the candidate for public office it happens to, and organization can be later qualified for exemption under Section 501c4. For other sections of 501c organizations.